Okay, let's go.
Welcome to The Explainer. Today, we're going to tackle a trading strategy that, honestly, a lot of people find intimidating. It's called price action trading. It means using zero indicators, just pure chart analysis. And I know, that can seem complicated, but we're going to show you how a really simple three-step process can make it all click.
You know, for a lot of traders, looking at a clean price chart, it feels like you're trying to read a foreign language, right? There are no indicators flashing buy or sell. It's just you and the chart, and it's so easy to feel completely lost. You might think, man, is this rocket science? Well, what if I told you the secret to mastering it has nothing to do with being a genius? It's not about predicting the future. It's actually about following a simple, repeatable process. In fact, it's as simple as 1, 2, 3. And in this explainer, that's exactly what we're going to do. Break it down into a three-step framework that's going to bring some serious clarity to your charts. All right, so let's get into it. First things first, what are we even talking about when we say price action trading? Okay, simply put, it's the art of making your trading decisions based only on what the price is doing on a clean chart. That's it. No clutter, no confusing indicators. It's all about learning to read the story the market is telling you, Using trends, support and resistance, and patterns to find those really high probability setups.
So the real key to taming this so-called rocket science is to stop guessing. I mean, the biggest mistake beginners make is just looking at a chart and randomly clicking buy or sell with zero preparation. The process we're about to show you, that is the preparation.
And here it is, the whole thing in a nutshell. Step 1, you identify. You figure out the trend and the market structure. Step 2, you prepare. You predict what could happen next. And only then, step 3, do you act. You wait for a clear signal to enter. This simple framework, if you use it before every single trade, is how you start to put the odds in your favor.
Okay, theory is great and all, but let's see how this actually works in the real world, right? We're going to walk through an example on an Aussie dollar chart to see this whole process play out in a live market. All right, step 1. The first thing we do is nothing. We just look and analyze. We're not even thinking about placing a trade yet. The only goal here is to identify what's going on. What's the story the chart is telling us right now? Now, to keep from getting totally overwhelmed, we just focus on two key things. First, is there a clean, obvious trend? And in this case, yeah, for sure. It's clearly a downtrend. Lower lows, lower highs. Easy. Second, what's the most recent important structure level that was just broken? And right here, we can see the price just broke through a key support level. Think of it like a floor that was holding the price up. And that's it. Step 1 is done. Identification complete. Okay, so now that we've identified the lay of the land, we move on to step 2, prepare. This is where we start to think like a chess player, right? We're preparing for what the market could do next. We're asking ourselves that all-important question, what if? And this is that critical if-then thinking in action. And notice we are not trying to predict the future. We're not guessing. We're just preparing for the two most likely scenarios. So if the price rises from here, our prediction is that the old support level will now act as a new ceiling or resistance, and the price will fall. But if the price just keeps falling from where it is, well, our prediction is it'll break the most recent low and just continue the downtrend. See? Now we have a plan no matter which way the market decides to go. And only now, after we've done all that homework, after steps 1 and 2 are complete, do we even think about entering a trade. This is step 3, act. This is where we patiently wait for a very specific, predefined signal that tells us it's time to pull the trigger. And check it out. Look what happened. The price moved up right into that zone we were watching. It then gave us a clear chart pattern on a lower time frame. That was our signal. So we entered, and the trade played out almost exactly as our if-then scenario predicted. A successful trade. All that preparation totally paid off. So, does this mean you found a magic formula that wins every single time? Absolutely not. No way. And honestly, understanding this next part is probably even more important than the 3 steps we just went through. Just let that sink in for a second. The outcome of a single trade is random. You can have the most picture-perfect setup, you can follow your process flawlessly, and the market can still do the complete opposite of what you expect. It just can. Okay, so now look at this example of a losing trade. The process was followed perfectly. Step 1, identify. A clear uptrend and a key structure level were found. Step 2, prepare. The prediction was that the price would bounce from that level. Step 3. Act. The trade was entered based on the strong buy signal. But what was the outcome? The trade failed. It hit the stop loss. And this right here, this is the crucial mindset shift you have to make. You can do everything right and still lose a trade. Professional trading isn't about trying to avoid losses. It's about accepting that they are a normal, unavoidable part of the business. The process was right, even though the outcome of this particular trade was a loss. So, this begs the most important question of all, right? If any single trade can lose, how on earth does a trader actually make money over the long run?
Well, the answer isn't some magic crystal ball. It's actually just simple math. See, you don't need to win 90% of the time or even 70%. A realistic, profitable edge might just mean winning something like 55% of your trades over time.
This is what's known as your statistical advantage. Over a whole bunch of trades, let's say 100 of them, that tiny little edge, winning just 55 and losing 45, that starts to play out. Profitability isn't found in any one single trade. It's found in the final result of all your trades added together.
So here's the real takeaway. The goal is not to be a fortune teller. The real goal is to trade a process, not a prediction. Your advantage only exists over a large series of trades, not in any single one. And you have to accept that losing is just part of the business of winning. It's the cost you pay to play the game.
So that's the question I want to leave you with. The very next time you pull up a chart, ask yourself this: am I trading a process or am I just guessing? Am I following consistent steps or am I just clicking buttons and hoping for the best? Because seriously, the answer to that question could change absolutely everything for you.